Hello viewers, this is going to be my first session where I'll be covering on the fundamentals of business and business processes, and this is going to be very useful for those students who are freshly graduated and who are getting into this field of accounts. So understanding these fundamentals will give them better clarity on how the businesses function and what are the nuances of the business they should understand, and what processes of business are very critical for them to get the foundation level understanding of the subject. So if you see, uh, this session we will cover the business fundamentals and processes. First, let us try and understand what a business is, right? So each one of us have our own definition of business, but then we will see, and all of us know the core objective. Why do we want to start a business? So basically, if you see, a business is an organization or an economic system where goods and services are exchanged for one another for money, and the most important thing is the intention of earning profit, right? So without earning profit, there's no point running a business. So for any investment that you invest in a business, you need to get a return on investment, right? So that has to be the core objective of starting the business. And of course, with a lot of the ethical practices and other things goes without saying, right? So first we will try to understand that, we will take a use case scenario. Let's assume that all of you would want to start a business. You have decided that you want to start a business. So what is the type of business that you want to start, right? So we will try and understand what are the different type of business that anybody can start, right? So the first, if you see, is trading business. So if I want to start a small business, and the best thing, and especially a business where I'm dealing in commodities or in goods, then trading is the easiest thing that I can do. So what is the function of trading business? So what do you do in a trading business? Basically, in a trading business, we buy and sell commodities or product. It's very simple. You buy the products as it is, and you add your margin, and then you sell those products for a profit. Okay. So the second type, so you have seen now trading. So what could be the second type of business that you can think of? Manufacturing. So what do you do in manufacturing? Basically, if you see, in a manufacturing environment, the businesses, like, convert raw material, components, or parts into finished goods as per the customer's expectation. So this gets into a manufacturing activity, and it is slightly a bigger activity compared to trading activity. Okay. And the third type of business that you can think of starting is the service industry, right? So basically, in a service where professional services are rendered, basically this type of business is an intangible economic activity. Majorly in these kind of business, we provide skill sets as per the customer's expectation, right? So these are the three broad. Now if you take trading, I'm not getting into too much of details. If you take trading, in trading again, you will have different variations in trading, right? So just to give an example, in a trading you can get into a distributorship, which is a larger kind of an activity in a trading activity. Then you can be a wholesaler, you could be a retailer, right? So these are various sizes of trading businesses that you can think of. Again, if you take manufacturing, you can have a small manufacturing unit, a large process based manufacturing unit, or a discrete manufacturing unit. Services, the examples of services are basically the services provided by doctors, engineers, lawyers, chartered accountants, tax practitioners, right? So broadly, if you see, these are service oriented businesses. So let's assume that you have now decided. One is you have decided that you want to start a business, and these are the three types of business that you can start with. So let's take a simple one, that you have decided that you want to do a trading business now, right? So once you have decided you want to do a trading business, because it's very simple, that you buy commodities, or you buy goods, or you buy products, and then you sell them, right? Very simple process. Now, the next thing that you need to now think of as a business owner, right? So, what is the ownership of business that you want to get for your business? We can also call it as business entity, right? So, we will see what are the different type of business ownership you can start your business with. The most simple and the most easiest one is, of course, all of us know that it is sole proprietorship. So what do we do in a sole proprietorship, right? So if you see, a proprietorship business is a business entity that is owned and run by one individual. So here, the owner of the business, or the individual, or the proprietor of the business, is responsible for all activities, all decisions that are taken in the company, right? So that's about the sole proprietorship. Now, the idea of learning this business ownership or business entity is that, now, as a fresh graduate, I would want to know what are the different type of business ownership that are there uh, in the country, and what are the pros and cons of these businesses, what are the advantages and disadvantages of these businesses. So we will be actually seeing the pros and cons of each type of business ownership, and so that, as a business owner, or as a business person, you would decide that what would be the best type of business ownership that you would want for your organization. Okay. So one is this sole proprietorship, and if you see, the second type of ownership that you can think of is your partnership, right? So all of us know partnership. Yes, I mean, like, basically it is managed and operated by two or more individuals. That's about the partnership part. Now, what are the other points, important points that we have to remember as far as this partnership business entity is concerned? So one is, yes, I mean, like, more than two or more people constitutes a partnership, and the maximum number of partners that you can have is 20 partners. Now, that's the restriction that you have here. Let's see what are the other restrictions that are there. So one, in case of a partnership, and also in case of a proprietorship, uh, we can read this statement and understand it is very important, that equally and personally liable for debts of the business. So that means, basically, all partners are equally and personally, when you say personally liable for debts of the business, that any debts which extends beyond the resources of the company, then personally the partners, and also in case of a proprietorship, they are liable for the business debts, which means the liability extends to the personal asset. So if there is any due that is outstanding, and there is no, for some reason, let us say the company is winding up. So in that case, what happens is that if there is any dues paid to any of the liabilities arising out of purchases or loan, then the in case if there is no money in the company, then the personal asset of the proprietor or partners are attached to that. That means the personal money needs to be uh, paid back, to be invested, to be paid back to these liabilities. Okay, so that's what it means. Liability extends to personal asset. Now, again, in case of a partnership, so we have Partnership Act, which was constituted in the year 1956, Partnership Act, and this is the body which basically governs the partnership business, and what are the do's and don'ts, or what are the statutory compliance that needs to be taken care as a partnership. Now, for you to start a partnership business, you don't have to register under the Partnership Act. So that means you don't have to. So the registrar of firm is the one which governs the Partnership Act. So you don't have to register your company. It is optional. If you want, you can register. Otherwise, also you can start a partnership. Just two, three people coming. And generally, why do you go into partnership? Maybe because of the resources. One is that yes, you need more capital for the business, so you are not able to afford single-handedly, and that is the reason why you are looking for more people who have common interest in the business. That could be one of the reason. The other reason could be that yes, I mean, like, you have money power, then you need some mind power, where you need an expert or a technical expert to basically help you in running this business. So these are some various ways that you can look for other people who can get involved in your business and bring equity or capital into the business. So registration again is optional. Now, if you see, if you are registering under the Partnership Act, then you can sue third parties. That means if somebody is not able to pay your company, then since you are registered under the Partnership Act, you can sue them legally. Now, as a partnership, since generally these are smaller entities, so there is no accounting standards applicable. There are a lot of accounting standards. If you see the other type of business ownership, we will know what are the kind of statutory compliance that needs to be done and what kind of standards that needs to be followed. But as far as the proprietorship or partnership is concerned, there is no accounting standards applicable for partnership companies. Okay. The next type of business, the ownership, the next type of ownership, because if you see, in case of a proprietor, you are a one-man show, right? So probably the expertise thing you need to pay for, so you don't have the ownership in case of a proprietorship company. Now, in case of a partnership company, so the maximum limit that you have is 20 partners that you can have. And the biggest drawback with the sole proprietor and partnership company is that the business debts are extended to their personal asset, right? So we have another type of business ownership, which is basically, all of us know that it's a private limited company, right? So we will, let's see what are the key points or the advantages or the disadvantages of uh, having a private limited company as a ownership of your company. So one, yes, privately held business entity, right? So privately held, so which means that I mean, like, the shares are not going to be available in public. Now, in case of a private limited company, see, these are some of the mandates that you need to follow. So one of the criteria for you to incorporate a private limited company is that your minimum authorized capital should be 1 lakh. So that means basically, when you are going to have a ownership of private limited company, so you have something called as memorandum and articles of association, right? Like you have the partnership deed, where the partnership deed, you basically, I mean, like, have an agreement or an arrangement between who is going to have invest how much of money, and how the profit sharing ratio is going to be there. Similarly, in case of in a private limited company, you have memorandum and articles of association, which basically talks about what is the objective of the company, what the company is going to do, and what are the roles and responsibilities, and various other aspects. So one of the criteria that you need to follow is that the minimum authorized capital should be 1 lakh. So it means, it has to, you cannot have less than minimum authorized capital of 1 lakh. Now, the owner's liability is limited to the share. Now, this is the biggest advantage, right? So, in case of a proprietor, the the money invested by the proprietor is basically called in terms of capital, right? In case of a partnership company, the money invested by various partners in the company is again called as capital. Generally, we call it as partners' capital. Now, in case of a private limited company, the money invested by the owners of the company is basically the terminology that we use is share capital, right? So the capital, basically they have different value of shares where people have to, basically, within the closed uh, environment, people have friends, relatives, they start this private limited company, and the owners, like they have their own share of capital invested. So what does it mean? So here it says the owner's liability is limited to the shares, which means if I have invested say about 1 lakh rupees as my shareholding in this private limited company, and in case of any business debts that is arising, what we saw during the previous one, then the liability is limited only to the extent of that 1 lakh that I've invested in my business. My personal asset is not going to get attached into the liabilities of the company's debts. Okay, so this is the biggest advantage of a private limited company. Now, again, here, if you see, minimum you need to have two shareholders and maximum of 200 shareholders. So, the maximum shareholder that you can have in a private limited company is 200 shareholders. Okay. And of course, yes, shares are prohibited from public trading. So, it's not available like any other, like now you go to BSC, NSC, and then buy shares. Those are public limited companies, which we will be covering in the next slide. Okay. And shares can be freely transferred among the shareholders. The shares can be freely transferred. Now, in case of a private limited company, there is a compulsory audit of book. Now, in income tax, you have a section called Section 44AB. Now, this section basically talks about a compulsory audit, which is basically it is termed as a tax audit. So, where every business before filing their return for purpose of income tax, they have to compulsorily audit the books of accounts. Okay. Now the question might come: what happens in case of a proprietor company and partnership company? Now, in case of this section very clearly says that up to a turnover of 1 crore rupees. So, if you are a private limited company, or sorry, if you are a proprietorship company, or if you are a partnership company, if your turnover crosses 1 crore in the year, then you have to compulsorily audit your books of account. Okay, so there is a this 1 crore threshold limit for compulsory audit in case of a proprietorship company and partnership company. But whereas in case of a private limited company, right, so compulsorily, irrespective of the volume of turnover or the value of turnover, compulsorily year on year, a private limited company needs to audit their books of account before filing their income tax return. Okay. Now, accounting standards are applicable. There are various accounting standards which are there where it is going to be applicable. Like, for example, if we have IND AS. So, IND AS stands for Indian Accounting Standards. You must have heard about IFRS. Okay, so these are various accounting standards which, if your company is a private limited company, then you have to adhere to these accounting standards, whatever accounting standards are applicable. And a lot of restrictions. Now, in case of private limited company, Ministry of Corporate Affairs, where companies, this is governed by the Companies Act, where like you have to follow as per the Companies Act. So, and there's a governing body. So, for you to start a private limited company, the first is that you have to ensure that the name is available. So, you can't start another private limited company which is already been registered and which is already running. So every private limited company, the name of the company should be unique. So you cannot have some other company which is already a private limited company. You cannot have the same name. So that is where, first is that before you apply, you need to check for the availability of the name that you intend to christian for your company, and application for name reservation and approval processes are there. Okay. So what is the restriction here? If you see, I can't have more than 200 shareholders. Now, supposing I'm into a large trading also, or I am into a large manufacturing company, so I need more of capital to be invested, and probably I need more people who can take care of various divisions of my business. But the restriction here is 200 shareholders. So what do I do? How do I graduate to a next level? The next level of graduation is basically a public limited company. So we will see what are the key highlights of public limited company. So one is that the company with a limited liability, okay, public limited company. The other one is that now the shares of the company is offered to the public, right? So which means you and me as a general public, if we want, we can go and invest our money into these companies, and we can become a shareholder. Okay. The shares can be bought through IPO or from stock market. So what is IPO? So basically, IPO stands for initial public offering. So that means first time when I am floating my company as a public limited company, I offer my shares to the public. So you must have seen in the newspaper where the company is offering, the initial public offering is there. So where you can apply for these shares, and that's what is basically your initial public offering. Or, right, so you can, we have this two uh, trading market in our country. So one is BSC, which is the Bombay Stock Exchange, very very old, the first one for stock trading. And then we have this NSC, National Stock Exchange. So you need to have a demat account now, and if you have a demat account, you can now I mean, like, buy any public limited companies. Private limited company shares are not going to get listed there. So any public limited company share, you can go and buy, or you can sell those shares that you have. So that's where you buy or sell or trade in the public limited company shares in the stock market. The shareholders' liability is limited to their shareholding. Like private limited company, even in public limited company, the shareholders' liability is limited to your share. So let's take an example that you are investing in one share of a public limited company, for example, Reliance Industries or Infosys or TCS. Right. So you literally become the owner of the company, even though you have one share of the company which you must have procured through IPO or through stock market, but you are the owner of the company. But your liability is limited only to the extent of the money that is you have, the value of the one share that you are holding. Okay. A public limited company is very very strictly regulated, because the public money is involved. So it has to, there are a lot of restrictions that are brought in, a lot of regulations which is going to govern the public limited companies various activities and operations. Now, what is the minimum number of shareholders you require here? In case of a private limited company, you had minimum two shareholders and a maximum of 200 shareholders. Right now, in case of a public limited company, it says you need to have a minimum of seven shareholders, right? And you need to have a minimum of three directors. And in this case, the minimum paid up capital should be 5 lakh. So we have to now understand between the authorized capital. So in the private limited company, we saw that the minimum authorized capital has to be 1 lakh. So what is the differentiation between an authorized capital and a paid up capital? See, authorized capital is that basically how much of money the company can get from the shareholders, or how much of capital that they can acquire, right? So that is basically the authorized capital that is prescribed in those documents, the memorandum on the articles of association, right? So it is prescribed there. So the minimum authorized capital there has to be 1 lakh, and they can, I mean, like, the paid up capital is that out of the minimum authorized capital or any authorized capital, how much of money is paid towards this capital, right? So that is basically the authorized, the differentiation between the authorized and the paid capital. Now in this case, if the minimum authorized capital of a public limited company is say 100 lakhs, or let's say it's 1 crore, but for you to start your public limited company, when you go to the market with an IPO, then your paid up capital should be minimum 5 lakh rupees. That means initially you have to start with the minimum paid up capital. That means you need to have shareholders who have invested minimum of 5 lakh rupees for you to incorporate this public limited company. Then the directors here need directors identification number, which is called as DIN. So this is basically to get all the detail of the person responsible in the public limited company, so that tomorrow in case something goes wrong, I mean, like, some responsible person can be held accountable for. Similar, like what we have seen in the private limited company, the name availability check and the application and the name reservations and the approvals are required, right? So now the difficulty here is that the regulations are too much. The accounting standards are applicable for private limited and public limited company also, right? So compulsory audit is going to be applicable for public limited company also, right? So but then uh, of late, I mean, like, we must have heard this. It's a new kind of a entity that the law which is coming. It's the limited liability partnership. We must have heard about this. So this is a basically an through an act of Limited Liability Partnership Act, which was incorporated in the year 2008, and it's not very popular in India, but it gives you a lot of benefit. Let us see what are the advantages or benefits of this limited liability partnership. So one is this is you have to register under this Limited Liability Partnership Act of 2008. Now this is a hybrid legal entity. So which means it has the characteristics of a corporation and partnership. It's actually a partnership, but then it acts like a corporate. Okay, it gets a corporate like protection against the personal liability. So in case of a normal partnership, the company's debts are attached to the private assets of the personal assets of the partners or the owner. But we saw that in case of a private limited company and public limited company, it is only restricted to the extent of the share that they are holding in the company. So similar kind of a behavior is available in this kind of a partnership, where the personal liability is not attached to the company's debt. It is only to the extent of the capital that they invest into the business. For tax purposes, it is treated as a firm, right? And share transfer governed by the LLP agreement. So, like the partnership agreement, you have this limited liability partnership agreement, where that agreement is basically going to talk about how we are going to, transfer the shares, and what is the profit sharing ratio, and various other things are, I mean, like, are captured in the agreement. Okay. Now, in this case, like the proprietor and partnership company, in this case, even though it has the characteristics of a corporation, right? So here the audit is done only. This is what I was mentioning about the Section 44 AB audit as per income tax, and the compulsory audit needs to be conducted for the LLPs, provided their turnover is exceeding 1 crore rupee. Okay. Now you see this minimum, you need to have two members as a partner, and the best part here is there is no maximum limit for partners, right? So you can have any number of partners. Unlike in a normal partnership, you had a restriction of 20 partners, right? Now, if you think of a private limited, public limited, too much of regulatory hassles are there, right? So compared to that, this is a much better thing, and it gives more flexible to businesses rather than getting entangled with the compliance and statutory requirements. So I can have any number of partners. And the next one is very, very interesting. No minimum capital is prescribed. So literally, I can give an example. Literally, that let's say two of them are starting this limited liability partnership. I mean, like both of them can, uh, introduce capital of, let's say, 100 rupees, 100 rupees, and then they can go and register under LLP Act, and then they can start the LLP entity or the business ownership for their business. Okay, so there's no minimum capital prescribed, unlike your private limited company and the public limited company. Right, legal entity can sue and be sued. So you have this protection since you are registered under the LLP Act. You have this protection, right? So now, as of now, if you see, the limited liability partnership does not have any accounting standards prescribed, right? So if we compare, so these are the different types of ownership that we can think of for your business. So we took this use case or the example of business, that you have decided to start a business, and you have decided that you want to start a trading business. The next step that you need to take care or think of is that what is the type of business entity that you need, or what is the business ownership that you want for your organization. So we saw multiple business ownership that you can have for your company, and we also saw the different aspects of each of those entities or each of the type of ownership, the pros and cons of it. So this would, like, basically help you to understand that what are the types of business entities that are there. And tomorrow, let us assume that if you are going and working in a company, this is basic knowledge, but I'm saying, so somebody says that no, our company is a limited liability partnership. So these are some of the highlight points which will help you to understand the entity much better, so that you are more knowledgeable when you are getting into a company as an accountant, or whatever it is, right, in the finance department, right? So the different type of ownership that we have seen: proprietorship, partnership, private limited company, public limited company, and limited liability partnership, right? So in our next session, we will talk about the various business processes. So now we have taken two steps to our business. One, we have decided what type of business we want to do, and we have also decided on the ownership of the business. Let us assume that you have decided that you want to start this business as a proprietorship business to start with. Later on, you can always, as your company grows, you can always move into a partnership. And if God is smiling, you can become a private limited company, public limited company, and all those things can happen gradually or incrementally also. So I hope this session would have given you some insights on the types of business and the types of business ownerships. And in our next session, we will talk about the various business processes that are involved in the business. That is going to basically give you an idea of what all things happen in the business, how the operations are taken care, what are the critical processes that the businesses need to undertake for running their business successfully. So thank you very much, all of you. I hope this session you would have really liked it, and please subscribe. And if you really like it, kindly click on the like button, and you can share this. And please don't forget to subscribe. There'll be a lot of more interesting subjects are going to be uploaded. So thank you very much, and see you all in session 2. Thank you.